And welcome to DocGo acquisition of SteadyMD. At this time, all participants are on a listen-only mode. A question-and-answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star zero on your telephone keypad. As a reminder, this conference call is being recorded. I would now like to turn the conference over to your host, Mike Cole. Thank you. You may begin.
Thank you, operator, and thank you all for joining the call today. Before turning the call over to management, I would like to make the following remarks concerning forward-looking statements. All statements made in this conference call, other than statements of historical fact, are forward-looking statements. The words will, plan, potential, could, goal, outlook, design, anticipate, aim, believe, estimate, expect, intend, guidance, confidence, target, project, and other similar expressions may be used to identify such forward-looking statements. These forward-looking statements are not guarantees of future performance, and we cannot assure you that we will achieve or realize our plans, intentions, outcomes, results, or expectations. Forward-looking statements are inherently subject to substantial risks, uncertainties, and assumptions, many of which are beyond our control, and which may cause our actual results or outcomes, or the timing of results or outcomes, to differ materially from those contained in our forward-looking statements. These risks, uncertainties, and assumptions include, but are not limited to, the risk that the cost savings and synergies from the transaction may not be fully realized or may take longer than anticipated to be realized, disruption to the parties' businesses as a result of the transaction and associated integration activities, reputational risk and potential adverse reactions of SteadyMD or DocGo customers, employees, vendors, contractors, or other business partners, including those resulting from the announcement or completion of the transaction, the extent to which SteadyMD's business will perform consistent with management's expectations and projections, accuracy of projections, and those other risks discussed in our risk factors and elsewhere in DocGo's annual report on Form 10-K, quarterly reports on Form 10-Q, Form 8-K disclosing this transaction, and other reports and statements filed by DocGo with the SEC to which your attention is directed. Actual outcomes and results, or the timing of results or outcomes, may differ materially from what is expressed or implied by these forward-looking statements. In addition, today's call contains certain financial forecasts related to SteadyMD and the transaction. These projections have not been audited and should not be relied on as being necessarily indicative of future results. The assumptions and estimates underlying the prospective financial information are inherently uncertain and subject to a wide variety of significant business, economic, and competitive risks and uncertainties that could cause actual results to differ materially from those contained in this presentation. Accordingly, there can be no assurance that the prospective results are indicative of future performance of SteadyMD or that actual results, including on a combined basis with DocGo, will not differ materially from those included in this presentation. Disclosure of the prospective financial information on this call should not be regarded as a representation by any person that the results contained in this prospective financial information will be achieved. The information contained in this call is accurate as of only the date discussed. Investors should not assume that statements will remain relevant and operative at a later time. We undertake no obligation to update any information discussed in this call to reflect events or circumstances after the date of this call or to reflect new information or the occurrence of unanticipated events, except as to the extent required by law. At this time, I will now turn the call over to Lee Bienstock, CEO of DocGo. Lee, please go ahead.
Thank you, Mike, and thank you all for joining us today. I'm Lee Bienstock, CEO of DocGo, and we are excited to share more about our announcement that DocGo has acquired SteadyMD. And today, joining me to help us do that is Guy Friedman, CEO and co-founder of SteadyMD.
Thanks, Lee. Hi, everyone. I'm Guy Friedman, the CEO and co-founder of SteadyMD, and we're excited to join the DocGo team and build a fantastic business together.
Likewise. Thanks so much, Guy. So, those that are new to the DocGo story, DocGo is a leading provider of tech-enabled mobile healthcare. We provide services across 31 U.S. states and the UK today, with a fleet of over 900 mobile health vehicles powered by our proprietary tech platform and our heroes in the field, our over 3,000 clinical staff that are out providing care to where patients need it, when they need it, every day. Since 2015, we've served over 10 million patients, and our patients absolutely love the services we provide. We have over a 92 patient Net Promoter Score. We have multiple service lines. We provide world-class medical transportation and medical transportation management powered by our tech platform and our state-of-the-art fleet, as well as the thousands of EMS professionals that I mentioned that are out every day providing exceptional medical transportation and medical transportation management. This year, we expect to transport over 750,000 patients. We provide in-home medical care with an innovative approach, which I'll talk more about, that uses upskilled clinicians to provide care in the comfort of a patient's home, office, or community setting. And this year, we expect to provide and visit over 150,000 patients and provide care in their homes, as well as mobile lab. We also provide remote patient monitoring with an empowered care team that provides continuous insight and monitoring on patients' health, driving smarter patient care plans and stronger patient engagement. And this year, we expect to monitor over 50,000 patients. And we do that with an incredible roster of partners and customers ranging from Mount Sinai to Jefferson to Northwell to Molina and LA Care, the NHS in the UK, and more. And now we're excited to add a 50-state tech-enabled telehealth platform in SteadyMD. So how do we do what we do? How do we bring care into the home of patients at scale? It really comes down to our innovative hybrid care delivery model, where we utilize mobile health clinicians that are LPNs or RNs, licensed practical nurses or RNs, who travel to patients' homes and patients' locations with specialized equipment. They're the hands, eyes, and ears in the patient's home where they are, and we pair them with physicians, PAs, and NPs that oversee the clinical visit virtually, synchronously, directing the LPN in the home to provide back real-time diagnostics, screenings, and other data so that the patient can receive a comprehensive visit, a high-quality visit in their home. It's this innovative approach that allows us to scale this model efficiently. I like to say the doctor coming to visit you is a 100-year-old idea. The doctor used to go visit their patients in the home, but it was just inefficient. There was a lot of drive time in between, and everyone knows we just don't have enough advanced practice providers in this country to meet the demand. And so in order to leverage that scarce resource maximally, we have them oversee virtually our LPNs in the field with our tech platform. And so SteadyMD is really going to help us scale this by providing, we'll talk more about it, the hundreds of advanced practice providers in the telehealth platform that will allow us to scale this mobile healthcare delivery across the country and the UK. Guy, maybe talk a little bit more about SteadyMD and the incredible platform that you and the team have built.
Yeah, thanks, Lee. Appreciate that. So yes, SteadyMD was founded 9 years ago in 2016. Originally, our business model was in the virtual primary care space, selling direct to consumers. In early 2020, we pivoted to our current business model. Today, as the slide shows, we power some of the largest digital health companies in the world, from the Fortune 100 to the most innovative startups doing cutting-edge digital health and caring for patients in new and unique ways. So the way our business works is digital health companies integrate with our platform, and we power their offerings with our 50-state clinician network, which is comprised of hundreds of NPs, PAs, MDs, and other specialists. Built a robust technology platform with great APIs, a custom EMR and online clinic. Spent a lot of time and energy building custom scheduling, workforce management, and other operational technology to make this all run. In the past year, we've had very solid growth. We've seen approximately 3 million patients, spanning from lab orders to urgent care visits and long-term care in a lot of different digital health verticals. So we're excited to join the team and keep building this and building upon the work we've done so far.
It's incredible. And to see the roster of customers that you have and the scale that you've been able to achieve with the team, The quality of the product and the platform is just incredible, and we think together we have a really incredible foundation to build a tremendous mobile health and virtual care management platform. Now, I wanted to spend some time for us to touch on the synergies that both of us are going to bring and achieve together. How DocGo is going to benefit SteadyMD and how SteadyMD is going to benefit DocGo. So, first, how SteadyMD benefits DocGo. We talked about it. SteadyMD's 50-state virtual provider network is going to really help augment DocGo's in-home care delivery. And the use of SteadyMD's hundreds of telehealth-based providers is going to potentially garner up to 10% of a gross margin improvement for our in-home visits. And SteadyMD is going to help us more quickly launch into new geographies with their existing scale and their existing presence. And we think the ability to cross-sell B2B telehealth services to our partners and customers is going to be a big opportunity as well. So we really feel that SteadyMD is going to bring a lot to the DocGo platform and allow us to scale faster and more efficiently. Guy, maybe touch on what DocGo is going to help bring to the SteadyMD platform and ecosystem.
Yeah, absolutely. It's always been kind of a dream in the industry to combine virtual care and in-person care. Both are extremely complex businesses. If we can offer a combined offering to both our sets of customers, it's truly an end-to-end solution, and that has tremendous potential for growth and the ability to care for more patients in a better way nationwide. So it's really an end-to-end solution where we can augment our clients and our partners with in-home care and all the services DocGo provides. And I think with DocGo's support, we'll be able to offer all the rest of the infrastructure DocGo has built to our partners as well. So it's really an amazing combination. I think it's going to be a revolutionary progress moving forward.
No question. And I want to kind of illustrate that a little bit more deeply here on how SteadyMD's telehealth platform is really going to accelerate, DocGo's service offerings. So first off, we think SteadyMD is going to help advance the growth of our quality and gap closure programs, our world-class quality and gap closure programs, as I mentioned, by bringing SteadyMD's already existing 50-state virtual care platform that's going to seamlessly integrate into our mobile healthcare deployments, allowing us to scale in the markets we're in, allowing us to scale to new markets and expand our home visit capacity is going to be tremendous. Not only that, SteadyMD has big scale in lab order approvals, and obviously DocGo has a fast-growing in-home phlebotomy, in-home lab business. And so SteadyMD's providers are going to be helping order diagnostics. They already help order diagnostics for major lab companies and employers. And of course, we can layer in DocGo's capabilities to that to provide in-home mobile lab and in-home phlebotomy. And as I mentioned, DocGo's mobile phlebotomy fulfills specimen collections in the home. So that pairs very nicely with SteadyMD's platform that's already providing order diagnostics for major lab companies. And then, of course, we've talked about it at DocGo. We've shared primary care is a big focus of ours. Primary care, preventative care in the home, helping keep patients healthier and out of the hospital. That starts with great preventative primary care. And so SteadyMD's providers are going to significantly increase the capacity for our primary care patients. And DocGo's in-home services are really going to augment SteadyMD's primary care practice. So that combination is going to allow us to bring primary care to even more patients much, much more quickly. And so many of the patients that we go and see to provide care gap closure programs and care gap services, so many of them don't have a primary care provider or haven't seen one in over a year. And we know there's a primary care provider shortage in this country. And so the ability to pair these two platforms together is going to help address that. And the need is absolutely there, and the need is great. Now, how do we do this? One of the big components of really this integration are the two world-class proprietary health tech platforms that we're both bringing to the table. And DocGo's platform helps optimize mobile health resources in the field to provide maximal utilization with the right vehicle, the right clinician at the right time, at the right location, all at scale I talked about. and SteadyMD's platform that optimizes the clinical resource utilization, the right clinician for the right patient at the right time via telehealth at scale. So this is a profound combination of tech platforms that help do and accomplish essentially the same thing in the field and remotely. And pairing those two together are going to allow us to be incredibly efficient and allow us to scale to much, much greater capacity. And so both platforms are purpose-built to create efficiency in last mile care delivery, and that is going to be a tremendous benefit to our customers, to our partners, to our patients by combining these two tech platforms. And we're very, very excited about that. So how did we structure the transaction? DocGo acquired SteadyMD for a purchase price of up to $25 million, which involves an upfront payment and a contingent payment. And DocGo funded the transaction through our existing cash on the balance sheet. Any contingent earnout payment will be paid in either cash or stock at DocGo's election. And SteadyMD is expected to generate approximately $25 million of revenue in 2025 and is expected to be EBITDA positive in 2026. And I already talked about all the synergies and overlap and efficiency that both platforms are going to hopefully achieve together. Our mission has always been to bring high-quality care to where it's needed, when it's needed, helping patients lead healthier lives and stay out of the hospital. Where we are needed, we go. And now with SteadyMD, we'll be able to go farther, more efficiently, faster. And I couldn't be more excited about our future. Now, we'll hand the call back to the operator for Q&A. Thank you.
Thank you. At this time, we'll be conducting a question and answer session. If you'd like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you'd like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before you press the star keys. One moment, please, while we poll for questions. Our first question comes from Michael Lattimore with Northland Capital Markets. Please proceed with your question.
Great, yeah, congrats on the news. Very exciting. Just curious if you guys have worked together in the past with any customers. How did you know each other?
Hi, Michael. Absolutely. Thanks for the question. So SteadyMD has been on our radar for quite some time. Actually, when we first started providing in-home services, we had looked at the marketplace for some potential partners to power the telehealth portion, overseeing and directing the mobile health clinician in the home. And at the time, we had looked at some of SteadyMD's competitors, and they didn't have the capabilities or, frankly, the quality that we needed. And we thought, well, maybe perhaps we'll build out this capability in-house. As we started to scale, we realized we want to go faster. There's an opportunity for us to be a lot more efficient. And so we started looking at utilizing and leveraging a partner again, and SteadyMD rose right to the top of that list. The ability to scale to all 50 states, they're already licensed and servicing patients via telehealth and have customers with patients in all 50 states. And we realized pretty quickly that, yes, there's a partnership opportunity here, but there's a much bigger opportunity for us to integrate more deeply, for us to cross-sell and provide our various different solutions to our different customer bases. And so we started to get very excited about the ability to combine both businesses, and that's when we really started heading down that path. And so that's really what we're excited to do. And we've been looking at this portion of the market. We've tested with it, and we think that SteadyMD far and away has the best quality, the best leadership team, the best tech platform that will help pair in real time the telehealth provider, the virtual care provider, the advanced practice provider with our mobile health clinician in the field. And we feel very, very excited to merge the two platforms together. And we think that it's going to be very accretive both to the top line and the bottom line.
Yeah, that makes sense. The 10% gross margin lift, was that for mobile health overall, the mobile health segment, or a subsegment of mobile health?
That's right. It's for the mobile health segment, really specifically targeted at our in-home business. So the ability to pair SteadyMD's advanced practice provider with DocGo's mobile health clinician in the field. Really, the advanced practice provider overseeing the mobile health clinician in the home is the most expensive component of our in-home visit. And it's actually one of the most difficult portions of the visit to fulfill with that advanced practice provider. And so we want to get a lot more efficient with the advanced practice provider utilization because it is the most expensive component. And that's exactly what SteadyMD is bringing to us. And so that paired with our mobile health logistics platform and the mobile health deployment, the LPNs in the field is going to bring us that gross margin improvement. The other thing that we've been talking about is, as you know, we acquired a mobile phlebotomy company earlier in the year as well. And so we're also looking at leveraging our fleet of mobile phlebotomists to do some of the care gap and some of the care gap closure program work in the home. They can't do all of the services we provide. I mean, that's one of our big competitive advantages. We provide over 40 different clinical offerings in the home. Some of them a mobile phlebotomist can do, and so we're looking to leverage them as well, which will also drive a gross margin improvement for some of the, call it more entry-level care gap closure visits in the home. And then we're also going to pair that with SteadyMD. So what you see us doing here is really putting the pieces in place to be very efficient in the field, using the right clinician for the right patient need in the field, paired with the right clinician for the right patient need virtually. And as we start to put those pieces together, we're going to get scale, which is SteadyMD significantly bringing to us, and efficiency. And that's really the power of what we're doing here and what we're announcing. We're getting scale and efficiency on the advanced practice provider on the virtual side, and we've been obviously making investment on the mobile health clinician in the field. And the pairing of that is really the big opportunity here, and we're excited about it.
Okay, great. Best of luck.
Thanks, Michael. Appreciate it.
Thanks.
Our next question comes from Ryan Langston with TD Cowen. Please proceed with your question.
Great, thanks. On the cross-selling point, I guess what does the overlap of the two books of business kind of currently look like? I'm just trying to get a sense of the overall opportunity, maybe just currently, to cross-sell those services between the two businesses.
Absolutely. Thanks, Ryan. So first off, on the existing sort of customer overlap, I think the big area there is really with the labs that we both work with. So we have a deep integration with one of the large major labs. SteadyMD works closely with another major lab that we work with less. So we think we're going to be able to really scale our lab business pretty significantly by working together, bringing some of the lab customers we have. SteadyMD is going to bring some of the lab customers they have. And so we're going to be able to build out that infrastructure and that scale. And then I think there's actually a big opportunity to cross-sell customers that we don't have, that SteadyMD has, and to cross-sell the SteadyMD customers, but also cross-sell the DocGo customers that SteadyMD doesn't have. So we're looking forward to that. I think SteadyMD works with essentially direct-to-consumer, B2C providers, wellness companies, a lot of health tech startups, and they have a huge roster of customers, some really, really impressive names. We're very excited to work with together with them. And then I think we really bring the enterprise hospital systems and payer partners that they don't have. So there's a big opportunity here, I think, to work with the already existing customer base we both have that overlaps, but we're also very excited to be introduced to a new customer base and them the same. So I think there's opportunity for both.
Cool. And then just last for me, I'm sorry if I missed it. I know you did mention some gross margin lift, but maybe just run through the growth profile of this company, maybe in terms of just revenue or a long-term algorithm, just how we should think about it maybe over the next couple of years, and maybe just a little bit more on how you think you can sort of leverage maybe existing G&A at both SteadyMD and DocGo over the next couple of years with that revenue growth. Thanks.
Oh, of course. So on the G&A side, I think we've done a lot of work up front on this, we mentioned in our press release that Alvarez and Marcel was retained, and they helped us look at some of the overlap on the G&A side, some of the synergy side. They made great pairing with us to look at some opportunities there. So of course on the G&A side, when it comes to compliance, human resources, finance, payroll, benefits, we're already identifying some really great overlap and synergies that just naturally comes from an acquisition like this. And then I was touching on the synergies really in the patient care delivery. I mean, that's where there's huge synergies as we go to market together in the home and virtually. So we've sort of identified both gross margin and G&A synergies as part of this, and we've had some really great minds helping us think through all of that, and we have a really solid plan going forward. In terms of the growth profile, we'll share a lot more about sort of the financial profile of the combination, what it does for our guidance, going forward for this year and into next year. We plan on sharing a lot more details about that on our earnings call coming up here in the beginning of November. So we'll dive a lot more into that. But we definitely think there's an opportunity for us to accelerate the growth trajectory of SteadyMD. It's a very impressive company. They have an incredible roster of customers. The solution is best in breed. And then we think that we can layer on both our resources and our infrastructure to help them scale even more. So, that's what we're looking at doing. They have a very strong growth profile, and we think we could supercharge that.
Great, thanks.
Yep.
Our next question comes from Ryan MacDonald with Needham & Company. Please proceed with your question.
Hey, this is Matt Shea on for Ryan. Congratulations on the deal here, guys. Nice to see how SteadyMD can accelerate a variety of your service offerings, but maybe relative to the payer business, was the deal in part from an increased level of demand or patients being assigned to DocGo and SteadyMD is needed to help service that demand? Or how should we think about this potentially accelerating the payer and care gap business?
Yeah, Matt, that is spot on. Great to hear from you, Matt. So, absolutely. I think on the payer side, that's everyone knows that's been following our company. We have a big opportunity there. We're going to see patients that don't have good access to care, that have mobility issues. We're going into their home. We're closing care gaps. We're helping provide preventative care, keeping patients out of the hospital where they're most costly. I mean, that's a big opportunity for our company. We've been investing into that. We have a world-class solution. Patients absolutely love it. I mentioned we have a 92 Net Promoter Score on that. And so we want to be able to scale it. I think there's really two aspects to this. One is new geographies, and we're going to be very thoughtful about that. But SteadyMD has a 50-state presence, and so that can allow us to scale a little bit more quickly to new geographies. We'll always continue to expand to new geographies consistent with our profile where we have an anchor customer there. And so as an example, we work with a payer today in one of our markets, and they asked us to expand to New Mexico, which we had announced. And so this will help us expand there a lot more efficiently, a lot more quickly. But of course, we also have that anchor customer to come with it. And again, care gap closure services, for that expansion. So there's no question about it there. I'll also mention on the PCP side. So a lot of the patients that we go and see, 1 in 4 Americans doesn't have a primary care provider, or doesn't know who it is. And so there's a big opportunity there. Actually, a big percentage of the patients we go see don't know who their primary care provider is or haven't seen a primary care provider. So we are continuing to invest in the capabilities to provide great primary care, which we feel ultimately improves patient outcomes, which is going to be a huge value, obviously, to patients, but also to the payers and the ecosystem at large. So SteadyMD has a deep history in providing PCP services. SteadyMD has a deep history in providing preventative care, urgent care. And so we're going to leverage their expertise in that space and allow us to go a lot more quickly into PCP. We recently had one of our payers tell us that they plan to give us lists of patients, 10,000 patients that are in need of PCP services. So we have the opportunity there. We want to scale into it. It will take us time to scale into that. Talking about those types of numbers, but this will help us absolutely give us a head start on that with SteadyMD.
Okay, great. That's helpful. And then on the synergies on the cost side, exciting to see that 10% gross margin improvement. How should we think about the timeline or maybe the pace of that expansion?
Yeah, I think that our plan is to integrate pretty quickly here, really to effectuate everything that we shared, on this webcast. I think we're really looking to have everything in place, sort of that integration happen over the course of the rest of this year and into Q1, and really hitting stride sort of in that Q2 through the remainder of the year. So I think that's really our timeline here. I think we're on a, call it 3 to 6 month timeline to really integrate and effectuate all of the synergies that we have planned here. And again, I think we have a really robust and well thought out plan as part of this acquisition. I'm really proud of really all the work that's gone in ahead of this. We were very thoughtful about it, and we really enlisted world-class advisors. And so I think over the course of sort of 3 to 6 months, you'll start to see integrations. But pretty quickly here, we're going to be looking to leverage the virtual platform of SteadyMD to help us expand. And then I think you'll start to see the synergy start coming into place at the beginning half of next year.
Okay, great. Thanks, Lee.
Of course.
Our next question comes from John Penny with Canaccord Genuity. Please proceed with your question.
Yeah, John Penny on for Richard Close. Thanks for the questions, and congrats on the acquisition. So I guess can you go into what the revenue model is for SteadyMD currently? Is it mostly visit revenue? Is there some recurring revenue, basic access to the tech platform, or just any commentary you can provide there? Thanks.
Yeah, absolutely. So I mentioned, SteadyMD, they provide telehealth visits and also lab visits. To give you a sense, on the telehealth side, they're expecting about 900,000, over 900,000 this year, and they're 2 million lab visits. On the pricing side, I think pricing varies. It depends on the services that they're providing. SteadyMD really prides itself, and we were very impressed by this. They engage deeply with their customers. They try to understand exactly what their needs are, and then they put together sort of a specific program for them. But I think the way to sum it up, typically it involves a monthly fee along with a per visit fee or an hourly fee, depending on the clinical services. And they also have monthly minimums, which is very smart, and it sort of protects them, which we like to see. So many of SteadyMD's customers are deeply integrated with them. That's another big component of it, with their platform, and sort of the SteadyMD platform in that regard provides recurring monthly revenue for us. So we're excited about that. We think they've gone to market very intelligently. They run their business very well. They're looking at providing tremendous value and also ensuring that their company is protected. So we are very impressed by that, and we think sort of a very, very good model, which aligns incentives with the customers and also the company, and patients, which is something we always want to see. I always say all three have to win. The company has to win, the customer has to win, and the patient has to win, probably most importantly, and then we'll be successful. Their contracting and model very much is in line with that.
All right, great. Thanks for that. And I guess one more quick one. So for on the press release, you said there's $20 million revenue expected through September 30th, and then 25 for all of or $25 million for all of 2025. Is there anything to call out for the implied sort of softer fourth quarter, or is that just kind of some conservatism, or anything to call out there? Thanks.
Yeah, great question, John. So I think our goal was to really kind of give a view in the press release of sort of what SteadyMD has done so far up to this point in the year. We're going to give a lot more sort of color and specificity on the earnings call, and that call is in say a few weeks here in the beginning of November. We'll announce the date pretty shortly. So I think we'll talk a lot more about what the expected revenue contribution is going to be for SteadyMD for this year, the remainder of this year. I mean, the year is almost done, but the remainder of this year, and then into next year. But we didn't want to put out a specific number. So we said basically a little over $25 million for the remainder of the year, but we'll adjust that and we'll update that with a sharper pencil and give more specificity on it on the earnings call coming up.
All right, great. Thanks, guys. Congrats again.
Of course.
As a reminder, if you'd like to ask a question, please press star 1 on your telephone keypad. One moment, please, while we poll for questions. Our next question comes from David Larson with BTIG. Please proceed with your question.
Hi, congratulations on the transaction. Can you talk a little bit more about the margin profile of SteadyMD? Like, just generally speaking, how's like the gross margin? Is it a tech company or is it more a provider business? Thanks very much.
Of course. So SteadyMD is sort of cut from the same cloth as us. It's a tech platform that also provides the clinicians. So to me, I think that really is the future of healthcare. And I know, David, we've talked about that a lot. I think that the companies that are going to win both provide the technology, but then also sort of the boots on the ground or the virtual providers to pair with it. I think so many of the customers we speak to, people are trying to sell them software, and the software is great, but you also have to have the workforce to utilize that software to actually implement clinical offerings. And so we really feel that that is a key component of our strategy. I mean, we leverage technology, we purpose-build it ourselves, which we've done at DocGo. SteadyMD has done that on their platform. And so, but they also provide the clinicians that go with it. And we're going to continue to invest that way. I see some questions in the queue here relating to technology and AI, which I'll touch on. But essentially, that's our big sort of strategic vision, is that we want to have a tech platform enabled by the clinicians that utilize it and are providing care and providing that to our customers, and that's a big competitive advantage for us. I think the addition, in terms of margins specifically, I think the addition of SteadyMD is going to help us achieve our gross margin objective of 40% plus for the mobile health business. I think SteadyMD's current gross margins are in line with that. And I think, again, we talked about it on this call, but I think SteadyMD is going to help us elevate the gross margin of DocGo's current health care in the home business, right? So it's twofold, right? I think it's going to help us achieve our gross margin objectives on the in-home visits, and then, of course, their gross margins in line with this 40% plus mobile health gross margin goal. So really, it's about, this is about efficiency. It's about high utilization of the advanced practice providers, overseeing the mobile health clinicians in the home. And then it's also about us bringing the mobile health clinicians to the SteadyMD platform so that they can offer the ability to go see patients in their homes or where they are to the SteadyMD customer base. And once we scale that, we're going to see some good gross margin accretion here.
Okay, great. And then just one more quick one. Can you talk about the difference between the telehealth tech that SteadyMD has versus what DocGo did or did not have previously? Because it was my understanding that there was some virtual care capabilities that DocGo had. Basically, the nurses in the home could be overseen by a physician. Or did you not have the telehealth capability previously? Thanks very much.
Yeah, great question, Dave. So yes, I mean, our platform has always been about pairing the mobile health clinician in the field with the advanced practice provider via telehealth. Some of the visits were telehealth only, and yes, we did utilize telehealth synchronously with overseeing the visits, but nowhere near the scale that SteadyMD is operating at today with the hundreds of advanced practice provider clinicians that they have trained and onboarded on the platform. I also think SteadyMD's platform is really akin to what we built on the mobile side, right? So Dave, well, our mobile health platform is about pairing essentially the right clinician in the field with the right vehicle, with the right diagnostics for the right patient need, optimizing their routing, the logistics, clustering the patients in a way that we can be very efficient in the field. We didn't have the platform similar to SteadyMD that does that on the virtual provider side. So the right clinician for the right patient need under the right program that they have with their customers, all scheduled in a way that is incredibly efficient. And so the way I view it is SteadyMD has their current customer base. It's generating revenue. They're providing those services to their customers. And any gaps in their schedule currently, we can absolutely fill those with our in-home visits paired up. And then ultimately, they're going to help us scale and bring on more capacity to meet our needs as well. So their platform really does what our platform does for mobile health clinicians. They do it on the virtual side. And we think that their platform, not only with the scale of their platform, but their platform is going to help us be more efficient, pairing synchronously the virtual provider with the mobile health provider in the field. And we're very excited about the opportunity to integrate their technology with our platform. So really, it's going to be a very differentiated platform where we are optimizing the resources in the field. At the same time, we're optimizing the resources virtually. I think that's going to be very unique, probably very, very, very differentiated. I don't know anyone else that's doing that right now, so it's going to be, very powerful.
Thanks very much. Congrats.
Thank you.
Our next question comes from Aidan Conniff with Stifel. Please proceed with your question.
Hi, guys. Congrats on the transaction. You have Aidan on for David Grossman. My first question was just around the seasonality, if there is any in the SteadyMD business. I know your guys' payer business has a little bit of seasonality as payers look to close kind of these HEDIS scores towards the end of the year. So just wondering if there's any seasonality in SteadyMD's.
Yeah, I think inherently in healthcare, there'll always be some seasonality, around flu season. I think it's actually pretty similar to what we see with the end of year push and sort of the Q1 of the year, sort of those winter months. I think we see an uptick in volumes. We see it on our medical transportation side. We see it on our care in the home side. And we think actually that once we start layering in SteadyMD into the care gap business, we see payers really do a sprint towards the end of the year to try to close out as many care gaps for patients as possible. So we've been gearing up for Q4. This is going to help us in Q4 somewhat. I mean, there'll be some time to integrate here. But we think over time, the back half of the year, as we integrate SteadyMD, absolutely for next year, we're going to see increased volumes because we see the payers really sprinting towards the back end of the year, and we probably will anticipate that with SteadyMD as well, once we integrate them and once we bring them on.
Okay, thanks for that. And then just one clarification. For SteadyMD, are the clinicians W-2'd or 1099'd?
Yeah, so it's a mix. Depending on the services that they're providing and how many hours they're working for us. So I would say it's a mix.
Okay, great. Thanks, guys.
Of course.
There are no further audio questions. Are there any web questions?
Thank you, Rob. I do see a number of questions in here. We'll take as many as we can. I think a lot of them we've covered. But I want to take a few here. So there's a question, as I mentioned in the chat, relating to AI. Hi, is DocGo leveraging AI and other emerging technologies to improve scalability? So absolutely we are. We're infusing AI in a number of different areas. One of the most exciting areas that we're infusing with AI is in our patient engagement and outreach portion of our deployment. So those that know our business, the payers give us lists of patients that are in need of care. They have open care gaps, they have chronic conditions, and we reach out to those patients and schedule visits to go to their home and close out these care gaps and provide preventative care. We've been leveraging AI tremendously in that effort. So, for example, when we confirm an appointment, we schedule an appointment, if patients have a question of what to expect during that appointment, AI is answering a lot of those questions and rescheduling and scheduling patient visits, and we're starting to use it more and more on the outreach towards those patients to schedule and be very efficient there. We're also utilizing it in other facets of the business when it comes to routing. I mentioned scheduling. So we're making it very efficient on the operations of the business leveraging AI. And that scheduling platform that I mentioned, we built that in-house. So we're excited about that. And over time, it's something that we can extend to our customer base. And we're also looking at ways to predict whether a patient is going to show up or whether they're going to be there when we arrive at their home. So as we do more and more visits, and we're doing thousands and thousands of visits to the home, and of course now with SteadyMD, really over 1 million virtual visits, we want to make sure that the time still works for the patient. We don't want to show up at their house and then not to be there. And so we're building models to predict patient no-shows, cancellations. And so that's a big facet as well that we're looking at to, again, get us even more efficient and make sure that when we show up at a patient's home, they're there, they're ready for us, and we're there to provide great care, and the timing works. So we're building some technology around that as well. So, at our core, we're a tech company. We're going to push into that space to make us even more efficient, to provide patients with great service, and then really leverage our clinical staff to make them more efficient in providing patient care, and that's a big area for us. So really appreciate that question. We have a question in here. How does this transaction fit into DocGo's broader M&A strategy? So the focus for our M&A strategy is to add to our capability set. That's our core goal. I mean, with companies who have built world-class platforms, that's a criteria. On the mobile health side, we're seeing companies we're seeking companies where I think we can layer on their last mile mobile health capabilities to add to ours and leverage our tech stack to create value, and very similar in line with the SteadyMD acquisition. We didn't talk about it as much on this call, but we're very proud of the platform we have on the medical transportation side. We have one of the world-class medical transportation platforms, as well as our crews in the field. So, we're on the medical transportation side. We're also seeking opportunities to increase scale in our existing geographies and maybe expand the footprint. But as I mentioned, we're always looking where expansion into new markets comes with an anchor client on the medical transportation mobile health side. That's always a crucial component to us. All that is staying the same. Okay. We have a lot of questions here. We'll try to get to as many as we can. There's a question in here about, will you operate on two platforms or will you integrate into one? Will you expand into the rest of the world, and how soon would that be? That's a great question. We are ambitious. Thank you, Fred, for that question. So our plan is to really integrate the two platforms, as I mentioned, over the next 3 to 6 months here. Again, patients won't feel that integration on the operational side, but on the efficiency side they will, and the quality side they will. So we're very excited about that. To the world, I'm not sure we have that ambition just yet. I think the U.S. is a huge market that offers a lot of opportunity in and of itself. And so, as I mentioned, we'll expand to new geographies with anchor customers, but also really use SteadyMD to get more efficient in the geographies we operate in. When it comes to the rest of the world outside the U.S., know that those that know us well know that we operate a great business in the UK. We have 600 healthcare heroes out in the UK providing services up and down the UK. And so I think over time, this is absolutely an opportunity for us to leverage telehealth and virtual into what we're doing over there. But of course, that will come with the necessary regulatory steps and the necessary compliance steps. And, we'll look into that when the time is right. But thanks for that question. Absolutely. We're looking to expand, and we're excited about it. Okay. I think we have time for one more question. Let's see. A lot of these we've covered in earlier remarks. Okay, actually, a lot of the questions can be summed up really with this one, which we spoke about. How does SteadyMD's telehealth platform specifically complement DocGo's existing mobile health business? And we touched on it. Almost a lot of the questions are really oriented around this. So that's actually a good summary as we close out this call. I think, again, the magic of our platform has always been our ability to pair a mobile health clinician in the home with a virtual advanced practice provider overseeing the visit through telehealth connection. And so the advanced practice provider is the most expensive component of this delivery model. And as I've been talking about, SteadyMD will allow us to maximize the utilization of the advanced practice provider. So this increased utilization and 50-state coverage is going to allow us to, as I mentioned, drive up our gross margin while also scaling to new geographies, again, just more expeditiously and profitably. So short answer, efficiency and scale. That's really what you're hearing from us here today. So Really appreciate everyone joining the call. We're very excited. Guy and Yaron, the founders of SteadyMD, along with the SteadyMD team, are joining the DocGo family. They are incredible operators. They're innovators in the space. They're very well regarded, and we're just excited to welcome their team and their platform and their capabilities to ours. And I'm very excited for the future. So with that, I'll hand it back to the operator, and looking forward to speaking to everybody in the coming weeks and months, and looking forward to people joining our earnings call at the beginning of November, and looking forward to building this future together. Thank you so much.
This concludes today's conference. You may disconnect your lines at this time, and we thank you for your participation.